Central banks aren't just buying gold, they're scrambling for it. February of this year saw the biggest net gold purchases in months, and retail investors are starting to wonder, what do these bankers know that we don't? And if gold is suddenly the go-to safe haven for governments, what does this mean for the rest of us trying to protect what we've worked so hard for? These are some things worth considering. And in this video here, I want to talk about why this matters and why having physical gold in your hand, not in some paper promises or digital IOUs, could be the single smartest move you make this year and beyond. Let's talk about this one. All right, so I want to take a quick minute to share my thoughts in reference to a recent chart that I came across that really indicates what's happening in the gold market and how central bankers are continuing to scramble to get physical gold, while governments are telling them that everything is going to be all right, or leading the people astray and thinking that it's possible to balance off the trade deficit, cut the budget, and as Donald's saying, make America wealthy again. Yet if he never addresses the reality that our currency is only working with 3 cents of its original 100 cents over 100 years ago, then I'm not quite sure how he's going to be able to pull this off. But yet that's why I make these videos here to remind you how at the end of the day it's all about purchasing power and preserving everything you work hard for. And not only do I try to bring you the information that should matter, the things that the mainstream media won't talk about, but I also try to present strategies in which you can take advantage of getting physical while you still can. And of course that has everything to do with the idea of being able to get physical gold in your possession in many different forms and sizes, because it's not like holding 3/9 fine 24 karat gold in your hand. But more on that at the end of this video. But before I move any further, as always, if you guys are new to the channel, make sure you subscribe, hit that bell notification or check mark, then also drop a comment down below. Let me know your thoughts on this subject matter. Would definitely love to learn which angle you're looking at this from. And then also, there's no point in telling you about all these events and pointing you in the direction to be able to protect and preserve yourself if people don't find out about it. So take a minute, share this so more people can get an idea as to what's really going on and stuff that they won't hear from their mainstream news sources. But I want to start off by talking about what I consider 2 red flag catalysts behind the current gold rush that we're witnessing right now. And it all has to do with what's happening right now. Gold surpasses previous highs and sets new highs every single week, it seems. As you can see on this chart here above my head, February of this year indicates that something is happening, and the chart doesn't lie. So February's net gold purchases clocked in at 24 tons, the highest since November of last year. And of course, this information comes from the IMF and the World Gold Council, of which this is data that is given to us, so therefore you got to take it with a grain of salt. But then again, it's just not a blip. It's part of a 21-month trend where central banks have been a net buyer in 20 of them months. So think about that. Month after month, behind closed doors, central bankers have been shifting their reserves from paper to gold. And this latest spike, signal flare. They're preparing for something, maybe not tomorrow, but soon enough, because there's a lot more blue on this chart above me, which indicates gross purchases, than the actual purple, which indicates gross sales. And it's not just the usual suspects nibbling away at the edges. We got Poland that added 29 tons this past February, pushing gold to 20% of their reserves. We got China, Turkey, and Qatar, all still buying aggressively. And the question is why? Because when the music stops, whether it's from geopolitical conflicts, a debt implosion, or global currency shifts, gold is still what has been true, tried, and tested, and still protects and preserves, even for governments. And here's a quick snapshot of the central bank's holdings from this past February. As it says here, the National Bank of Poland led global central bank purchase, adding 29 tons to its reserve, marking Poland's 11th consecutive month of net gold buying, bringing its total to 480 tons. Then we have the People's Bank of China continue its steady accumulation, adding 5 tons in February, and that's what we're being told. And then we got the Central Bank of Turkey adds 3 tons. Qatar Central Bank adds 2 tons. The Central Bank of Jordan and Czech National also reported purchase of gold now at 72 tons, and that's 30% of their reserves. And so clearly we can see that as central banks buy gold, adding it to their reserves, it's the equivalent of them creating digits in paper and then going out into the open market and using that paper to actually buy physical gold to then bring back and put into their own personal savings. And if the central banks are doing it, how come you're not doing it? Or I'm sure the majority of you are. And that's something that should definitely pay off down the line as all this stuff that we're witnessing unwinds. And another thing that this indicates is a 16-year trend. But the last 3 years have changed the game completely. And it's not too surprising that central banks have been net buyers of gold since 2010, but something changed in the last 3 years. So as you can see on this graph here, since 2022, they bought over 3,100 tons, and that's not portfolio balancing, that's repositioning. And so the World Gold Council confirms that 2024 was the 3rd straight year of over 1,000 tons, and we're already on track for more than that in this year alone. And so the colors on this chart tells a different story. There's far more light blue than there is purple, which is how we can tell that they're accumulating, not because they have nothing better to do, but because they're obviously running and preparing for something that they know is coming. So clearly, all that light blue indicates the accumulation at a level that mirrors a crisis response. So not just a normal routine reserve management. So after the financial retaliation seen in the post-Ukraine sanctions era, nations started looking at gold not as a luxury, but as insurance. And that's insurance against being frozen out dollar system, as well as insurance against manipulated markets and against fiat currency erosion. So the question is it surprising that retail investors are now paying attention to this gold rush? And so now that gold has surpassed $3,200 an ounce, as it's doing right now, people are taking notice. But this time retail isn't just watching prices, they're actually watching the players behind the curtains and what they're doing. And so when central banks treat gold like rafts on a sinking ship, regular people are asking questions and they start wondering, where's my gold? So this isn't about chasing gold chains anymore, it's about protection. And more people are realizing that ETFs or gold-backed paper can't help them if the system seizes up. So you can't spend a future contract if you need to go buy yourself something to eat. And you can't barter if you're standing in line if you just got digital IOU nothings on your phone as well. But you can hold physical gold, whether it be in a coin or a little miniature bar, and that's one of the big differences. So the last thought worth leaving you with is just to remind you that gold still matters if you didn't know that already. And even more so now than ever, because what we're witnessing from central banks and what that is telling us, and that's one thing we won't hear out of Washington, D.C. And so having physical gold in your hands is like holding onto your parachute while everyone else is waiting for the pilot to hand out one. And the primary benefit amongst many is that it sidesteps counterparty risk, where there's no broker, no bank, no fund manager. It's outside the system. And that's one of the primary reasons why central banks are hoarding it like never before. And so gold is revealing itself that it's not just a hedge against inflation, it's a hedge against instability itself. So when currencies get devalued or frozen, when trade routes get choked up, and when wars and the threat of wars and terrorists makes markets irrational, gold remains strong and steady and constant. And that's why it's been money for about 5,000 years and counting. And it doesn't need a central bank's blessing in order to function as what it was meant to do. It just needs to exist, and that's exactly what it does. And so that plays into why I believe people are waking up more than ever right now, because they're realizing that something's not right, and why gamble by planning these paper products and all types of derivatives when you can actually get physical, sit on the sideline, and just pray for the best. But as I mentioned, getting physical gold, there's never been a time to be able to get many bars of gold, 1/4 grain bars in your possession for protection, or either for gifts or waking up cards, as I call them, for family and friends to realize what's going on, because everybody can afford to actually get physical gold. And if you're interested in finding out more about how to get some of these gold bars here, these microfraction gold bars, then now might be a good time to tell you how to get a hold of some of the 1/4 grain 3/9 fine gold bars here. So this is a part of the Silver Team and the Quick Silver Wealth Acceleration Program that allows you to get a pack of 5 miniature gold bars that offers a different and unique way to get physical gold in something that will protect and preserve purchasing power throughout time. For these 5 1-grain bars, it's approximately over $40 or so, but it's good to say its price is going to go up as the price of gold goes up. So getting some now might be a good time if you have interest in protecting and preserving your purchasing power in something relatively new in these miniature bars here. And of course, if you're interested in finding out more, I'll leave the link in the description where you can go right to the Silver Team store, which is something that's available for community members to either have their own store or be able to purchase from members of the Quicksilver program. But anyway, if you guys want to find out more information about these here, feel free to click the link in the description, and you'll be more than happy that you decided to get your weight up in 24 karat gold that you can actually hold in your hands and potentially use as a savings tool or a bartering tool down the line if you needed to. But once again, micro mini bars available on sale in the silver store. Links in the description. And so that, my friends, is just a way of checking in, sharing my 2 cents on gold and what we've been witnessing, and more than likely what's more to come. Oh, and let's not forget, when it comes to forecasts, we got Goldman Sachs out here forecasting that gold should be $3,700 by the end of this year. And more than likely, it's going to be a lot higher than that, in my opinion. But once again, taking a minute, share my 2 cents on a variety of subject matter. Curious to hear what you think. If you found value from this information, then definitely take it, share it, drop a comment down below. Make sure you subscribe. Stay tuned for more of these quick take updates, because I enjoy bringing them to you, and hopefully you enjoy receiving them. But other than that, be blessed, be safe. Catch you later.